Is the stock market bracing for a disappointing CPI data and an impending debt crisis? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, today's SPY was down 0.44%, and as I just told you last night, this is going to be a trading range between 411 and 414 until we get the breakout, and you can see SPY is looking very bearish today on very low volume, closing right on top of that critical support at 411. So with tomorrow's CPI data report, we are likely going to get a very large gap up or down, and that is going to set the direction in the market. If we gap down below this critical support, we're going down to fill the gap at 407, and then below 407, we're testing critical support at 404. You can easily see based on the chart, a rejection from here could easily take us down from a lower high rejection to another lower low, which could take us all the way back to the 200 daily moving average and to fill that gap at 396. Now, if we start to bounce from support, it is possibly break 414 and then go close the gap at 415 and 421. But again, with all of the headwinds in the market, you need to let the price action do all the talking. There's no reason to guess where we're going. React to the price action breaking above or below critical support and then execute the trade plan for that direction. We break 411, you're getting bearish until we get all the way back above 414, and if we break 414, you're staying bullish until we break below 411. Have a trade plan ready now and then simply react to the price action. On the NASDAQ 100 triple Qs, we were down 0.63% today, coming back down to the rising 5 EMA, and we are still in the bull trend as long as we're above 321. If we break below 321, we'll be looking for support right around 318 to 315, and the gap close is just below. And if we break below the gap close, we'll be looking for the next gap down here at 308. So there's plenty of room for volatility going into the rest of the week, and there's going to be plenty of headwinds and plenty of noise on why the market is likely going to remain choppy and volatile. If we bounce from this support and we break back above the previous high at 324, we'll be looking for that double bottom price target at 327. On the Dow Jones, we were down 0.13% today, and we are still seeing that rejection from that critical resistance at 337, which means we could come down and fill the gaps at 333 and 329. The only way we're getting bullish is if we break back over 337 and invalidate this as a lower high rejection before the next lower low. On the Russell 2000 IWM ETF, we were down 0.3% today, continuing that rejection from critical resistance right around 176, which means we're likely coming down here to fill the gap at 171. We could easily fill that gap and then find strong support between 170 and 171 and then get that bull breakout above 176 to go fill the gap at 181, but only price action is going to tell us to get bullish. There's no reason to be bullish in IWM with this giant head and shoulders pattern sitting near critical support until we get the confirmed breakout of resistance. On the ARKK ETF, we were up 1.14% today, coming back up towards that negatively sloping 200 daily moving average, which is going to be resistance right at 39. On ARKK, we have gaps to fill to the downside at 36 and 32, so we need to remain bearish while we're below this critical resistance at 39 and 40.5, and I don't suggest getting bullish until we clear above 40. On the VIX, we are up 4.3% today as the VIX is still trading below 20, and I continue to tell you the VIX below 20 is going to remain a bullish indication until the VIX spikes out above 20. So for that reason, you only need to get cautious of the bear market returning if we see the VIX spiking back out above 20. On Bitcoin, we're currently down about 0.25%, and Bitcoin does look like a confirmed double top rejection from 29,500 while we're trading below the neckline at 28,000. With this double top rejection, it looks like we are going to lose support at 27,000. We simply need price action to confirm it, and then we will be looking for the downside price target at 25,000. Don't get bullish in Bitcoin until we break all the way above this previous high, which is at 29,500. On Google stock, we were down 0.39% today, but intraday we did hit the price target at the gap fill at 110 and instantly found resistance at the gap fill and saw sellers stepping in. And while we are still in the bull trend, this is a very bearish rejection looking candle, and we were outside the upper Bollinger Band. So for that reason, in Google stock, hopefully you locked your profits at the price target, and I would just be very cautious here because there is the risk of getting rejected and continuing lower. Manage your risk at the breakout at 106 and that resistance at 110. And if we continue higher and these Bollinger Bands expand, we could go all the way to the top of the channel, which is up there right around 117. On Amazon stock, we were up 0.75% today, and Amazon is right here at the negatively sloping 200 daily moving average, which is going to be a critical resistance zone between 106 and 107. If we can start closing above this level, I do think we will run up there to 115. However, this is the perfect area to get a rejection to a lower high before the next lower low that could take us down to 94. So just be very cautious at critical resistance if you're long, and manage your risk right here between 102 and 104. And if you're bearish, this is where you're going to be looking for a rejection from a lower high into the next lower low. On Microsoft stock, we were down 0.53% today, closing right on top of the 5 EMA. And as you can tell, Microsoft is running out of steam ever since we closed that gap at 310. If we do continue higher, we still have price targets at 315 and 318. But I'm not seeing a lot more upside in Microsoft until we get a pullback back down to the breakout right around 290 to 293. Confirmation we're heading lower will be that break of support at 304. On Nvidia stock, we were down about 2% today, and Nvidia was outside the upper Bollinger Band yesterday on the breakout, so it's just getting a little too far overextended, and today it's pulling back to the 5 EMA. So not too much damage here, simply just a pullback within a bull trend because we still do have the bull trend while we're trading above 280. The next target, if we stay above 280, is going to be 298. And if we get rejected down below 280, then we can be looking for a breakdown or a possible double top to bring us back down to 262. On Tesla stock, we were down 1.54% today, and we did see a rejection from 173, which meant we're coming back down to support at 167. And as you can tell from the candle, buyers did show up at that support, but we're still closing below the negatively sloping 20 daily moving average. You need to get risk off if we lose support at 167, because then we're coming back down to 160. 154 and the gap fill at 146. You can get more bullish at 167, especially if we break resistance at 173 for that gap fill target above 177. On Apple stock, we were down 1% today as we were getting a little too far overextended outside that upper Bollinger Band, and I do think we're due for a pullback that could take us back down to 169 and then the gap fill at 167. If we continue higher, we do have upside price targets at 174 and 177, but I think the reward to the upside is not worth the risk to the downside, and I think a lot of the move in Apple stock is already over with and we're due for a cool down. On the financial sector, we were down 0.37% today, and we are still in the bear trend as long as we're trading down below 33. The industrial sector was up 0.22% today, still trading below the 50 EMA and the 20 daily moving average, so be a lot more cautious while we're trading below 101. The healthcare sector was down 0.67% today, continuing that rejection from 134, and the only way we can get bullish at this point is if we clear that resistance, and then we'll be looking for the price target at 137. On the energy sector, we were up 0.04% today, still closing below all the moving averages and still in a bear trend, so if we do continue lower, we will be looking for the price target down here at 73. So jumping back over to the S&P 500, tomorrow could be a volatile day with the CPI data report, and if it does disappoint or it gives reason for the market to start moving, we could break down through critical support and go close some gaps to the downside. So be very cautious and manage your risk right here at critical support at SPY 411, and if we start to break out to higher highs, we can instantly get more bullish, but wait for the price action to confirm everything. You never want to get too ambitious in a trading range, so as I said last night, have patience and have discipline and wait for the breakout of the range. If you want to come trade with other price action traders and get access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community. I also have my own trade alert service called Bank Trade Alerts that will send you all of your buy and sell alerts directly via email and text message, and only trades the ETFs TQQQ and SQQQ. You can find out how to join the Stocks Channel Discord or Bank Trade Alerts by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.